Without intercorrelation and interconnection, you would just feel that the markets are completely random. What is pulling down Bitcoin at the current time? Bitcoin is this blue line. You can see it across here, the S&P 500 futures, the Nasdaq futures, and the Russell futures and the Dow futures. The major market indexes are coming down. This is pulling Bitcoin down with it. This is why Bitcoin is retracing. It's not market manipulation, it is simple intercorrelation and interconnection. We'll look more deeply on what the structural levels are on the S&P 500, the Nasdaq, the Dow, and the Russell, and also Bitcoin. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome, and welcome back CTKS family. Most traders and investors don't have a structured routine, they just rely on emotion and gut feeling to buy or to sell. This is an incredibly bad way of doing things. When we look through the cheat sheet, we're analyzing from row 1 down to row 7. We need to understand especially how row 3 is going. Row 3 impacts absolutely everything. And you saw that with the S&P 500 futures, the Nasdaq futures, the Dow and the Russell futures, they're all retracing at the current time. That is retracing Bitcoin and also total crypto market cap, which retraces the entire crypto market. To get consistent, we need to have intercorrelation and interconnection. For people doing the cheat sheet, you would have noticed that the VIX was coming into a support level and was likely to do a technical bounce. That's exactly what happened in the last session. The retracement in the S&P 500 in the major market indexes is nothing more than that at the current time. Now, to understand if there's prolonged retracement or if we're going to give all of those juicy gains back that we've just made, we need to look into structure, and I'll especially look through the structure of row 3 right now. If you're enjoying the content, please smash that like button, and if you're new, don't forget to subscribe. We have one of the best communities on YouTube. Looking at the S&P 500, we're going to look at intercorrelation. You can see this blue line. This blue line is undoubtedly Bitcoin. And you might ask, what has Bitcoin got to do with the S&P 500? Well, it's pretty obvious that Bitcoin and the S&P 500 are moving in directional correlation. Notice this, the S&P 500 came up, then retraced. What did Bitcoin do? It came up and retraced. Now, why are there retracements? It's all to do with structure. Specifically, all of price action structure, which is called CTKS structure. When we mark up a chart, we're not reading random tea leaves. We've got the most statistically significant analysis in TA, or technical analysis. I am a core developer in TA. Now, what we're looking at right here is this is a band kind of like SCs, but just provided a little bit differently from a visual aspect. Right now, what we're looking at is that we're just above a level of structural support in the S&P 500. We've got a level of structure above, and that caused a bit of a headache recently. This is on a daily basis. Now, if we lose this level of structure around that 5370, we could dip down into this 5250 mark of structure and get caught. Now, if we don't rebound there, we're going to definitely go lower. Now, if that is the bearish case, now what's the bullish case? To get above this level of structure and go for it, up to 5550. Just remember, you must always have three-dimensional thinking, an up case, a down case, and of course a neutral case, because price, believe it or not, is always moving in a wave. It's astounding that people don't actually believe the price moves in the wave. They think it only up or only down. This is not the case, never was, and if you look at a price chart, you know it. Please let me know in the comments, what are your thoughts on the concept of price moves in waves? Now, what's our analysis on the S&P 500? It's that we are sitting on a level of structure, well, just literally above a level of structure. But with the S&P 500 indexes, the futures coming down, we may have just lost that. Now, how does this inform our trading and investing style? It's all about retracements at the current time. Let's have a look into the Dow Jones Industrial Average. Now, what do we see with the DJI? We can see that Bitcoin, this blue line, is following the directional correlation of the Dow. Now, what does this mean? Bitcoin trades 24/7, but the major market indices, yeah, they're pretty relaxed. And they don't trade 24/7, definitely not 365 as well. Now, what we're seeing here, we've got a level of overhead structure, we've got even more structure above that. What does that mean? It means that there are sellers in here inhabiting these places and they want to push the price down. Where are they likely to push it down to? Around this 38,900 level. There's a fairly good level of structure down here. Now, what does this mean for the Dow? We've got a lot of sell pressure, a negative CTKS gap, and structure below. This is negative for the Dow. Going back to the S&P 500, you can see how it's being caught in between these two levels. That's a very different situation than what's happening inside the Dow at the moment. The S&P 500 and the Nasdaq are two vitally important charts to keep your eyes on. And when we look at the Nasdaq, just looking at the structure, we can see underpinning structure, a positive CTKS gap, and structural resistance around that 17,400 mark. We have quite a lot of structural support down around the 15,690 mark, so just something to bear in mind. Even if we do come down, we expect to get caught around here. And the thing is, because we have the indicator, we know this structure ahead of time. All I've done is throw on the indicator and just draw bounding lines between structure to make it easier for you to see. Unless you have expertise in level 1 and level 2 standard certification, you won't really understand the lines. That's why I do these zones for people. There are many reasons that we do CTKS structure. One of them is to understand where price can go from a normalized price basis. And we can see this month we're actually following the normalized negative price path. We're actually pretty much smack bang on it right now. And when we look at structure on the Russell 2000, which is a very important thing to keep your eye on because it's small, it moves around. It's got a positive CTKS gap and then structure. The sellers are up here just south of the 1980 mark. There's quite a few buyers down below as well. Now, what does this mean? We can see that the Dow is under pressure. The Russell could spring. Now, if the Russell actually springs up, what we'll find is that the retracement on the VIX was just very shortly lived and the VIX will continue down. If you're doing the cheat sheet, you absolutely understand what I'm talking about. And in last month's price action, the Russell just finished a little bit below the negative normalized price path. One thing to note, when you look at directional correlation between Bitcoin, which is this blue line, and the Russell 2000, it does throw a pretty significant signal. So what does it mean? If the Russell is starting to turn around, we would anticipate Bitcoin just putting in a bit of a low and just going for it to the upside. We'll have a look at Bitcoin's price structure in a moment. And the thing to always remember, the way that we look at structure is fundamentally different. We mark up all of price history with level 1 and level 2 standards. We know what we're doing. We're not looking into tea leaves. As a former statistics lecturer, first and second year stats, I can tell you that a lot of people, and coming from a financial background, I did a finance degree at university, a lot of people used to think that technical analysis was tea leaf reading, and a lot of old timers still think that. Hang on a second, I'm nearly 60, I am an old timer. But the truth is, when you look at TA from a statistical perspective, TA can throw incredible signals. Now, what do I know about that? Being inside financial markets for nearly 4 decades, I can tell you this is the bomb, without a shadow of a doubt. When you understand how TA is actually the cause of price either coming down or going up or finding support or finding resistance, it's an absolute game changer. Remember, news comes from price charts, not the other way around. Why? Because smart money always profits first. What you will find is many influencers will predict and they'll just make up something literally out of thin air. Instead, we need a scientific structure which takes us past story-based analysis, or SPA. We know that the particular areas of structural support and resistance in the S&P 500, in the Nasdaq, in the Russell, and also in the Dow. We've seen a degree of weakness start to creep inside the markets. You must keep your eyes on the futures, because when you get a retracement, you typically get a retracement back to a level of structural support. But remember, all of these charts work together. They don't look similar for no reason. Inside our community, we don't do opinion, we don't do stories. We only do structure, intercorrelation, interconnection, and emotional mastery. Why is emotional mastery in there? I thought it was just all about indicators. Well, when it gets red, the first thing that will happen is your fear will kick in. It's a primal response. Now, when it goes green, the first thing that will kick in is your greed as well. Both things will strip your profits right out from your pockets. For example, in yesterday's video, I gave you this structure and I said in order for us to go bullish, we need to get above 54.37. We can get very specific on the levels because we know what they are. And in the S&P 500, we didn't do it. We just rejected. We tried, but we failed. But where did we come back into? We didn't fall like a brick because there was structural support underneath. If we go south of the 53.76, that puts the 53.02 into play. That's the bearish case. But if we recover from here, exceed 54.37, the next one up is 54.77. You must be an observer, not a predictor. In yesterday's video, I also said that we were getting a lot of rejections here on Bitcoin. We're still under quite a degree. The trend is against us at the current time. That doesn't stop us making money by going long at spot. Absolutely not. But we must trade with the trend. The trend is always your friend, even if it's acting like a bad friend. A lot of people say for some unknown reason that you can't make money from trend lines. I don't know who these people are and why they say these things, but people do say it. I guess everybody's entitled to their own opinions, but the concept is without trend lines, you can't figure out where things are going. You don't know the structure. You can't see if things are weakening or things are strengthening. But the problem is, I believe the reason people say that is because people draw trend lines everywhere, all over the place, with absolutely no standards-based methodology. So level 1 and level 2 standard certification are the 250-year update to technical analysis, long overdue. In yesterday's video, I gave you a very good tip as to the level to watch to understand if we were going bullish or if we were going bearish. What level was that? It's simply a level of structure, 85,728. Now, what happened around that area? I'm just going to zoom in here for you. What we can see before the main markets open inside the US, we were making a series of higher highs and then it lost the plot right here. That was a structural failure that put the 85,386 into play. We found a degree of support, came up, tried to test, were rejected by the 86,318, did a structural failure on the 85,728 and a structural overshoot on the 85,386. Which immediately put into play the 84,591 structural support level. The thing to understand, when we look at a structural support level, if it fails, it immediately puts the lower structural support into play. It may take a time to actually hit that level, but that is what an SF or structural failure does. Structural passes put into play structural resistance levels immediately above. In other words, you are continuously retargeting your prices inside the market because you know what's happening. We've had a structural failure here. This immediately puts a lower level of structure in play, which is the 81,892 level. At least you know. The thing to remember, price is always moving in a wave. Downtrends don't last, they are met with uptrends. So just bear in mind that the red is not your enemy, it's actually your friend. If you can buy $1 for 50 cents, why wouldn't you? That is good investing. But the real problem is people are typically very, very emotional. And when they're emotional, when they see red, they're out and they've gone and they've closed the computer down or crashed their desk in half or done something, not knowing that this is actually how markets move. If we look just on the 15-minute basis, price is going up and down, up and down. Oh my God, it's moving in a wave again and again and again. If you understand this concept, if you understand this principle, you can take advantage of down waves. But you must know where the structure is and you must observe price just like a wild animal in its natural environment. You can't control this wild animal. You can just tag it, observe it, and then capture it at the right time. Or at least ride its back for a period of time before you get thrown off. But Ken, I've been told the markets are 100% certain. Anybody that says there's certainty inside financial markets is an absolute... what's the word? What's a nice word for it? Let me know in the comments. And to everybody who watches and comments, you're just absolutely awesome people. It's just an honor to be here sharing this with you. We're still at a critical stage. The stage hasn't been set yet for either a downtrend or an uptrend. It's just a little bit wobbly. Favor is going in the position of negative price momentum, but don't forget that can change. Always keep your eyes on structural levels. Everything is controlled by structure. When you understand that, you have the superpower. And don't forget just to keep your eye on the index futures. They're particularly important at this stage of the game. And it doesn't matter if you're trading or investing in Japan or Australia, it doesn't matter at all, or in China or in Germany, anywhere, the UK, Europe, it's irrelevant because Bitcoin will give you a risk on or risk off signal. It's currently signaling risk off, but this is simply a downtrend wave which will be followed by an uptrend wave at some stage. As always, because price is always moving in a wave. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now. And if you've made it this far, just put a comment, something about CTKS structure, so I know you made it. You are awesome. Bye for now.